Okay, hello and welcome to this segment of a price ladder course where we're going to be going through um, large orders, but this time we're going to be looking at a thin order book. So today's lesson is large orders on a thin order book. And this is obviously very interesting because we've taken a look at what it looks like when a very large order comes into a rather thick market, such as the Euro stocks. And now we're going to take a look what it looks like in a pretty thin market. So the market we're looking at in particular is the gold futures. And as you can see, just from this ladder over here on my right, you can see specifically that the ladder is relatively thin. So what I mean by thin is the offers are quite small. Sorry for that again, that keeps happening for me for some reason. The offers are quite small and the bids are quite small. So for example, in the Euro Stoxx 50, where we had something like 1 to 2K lots on the bid and offer, um, in the gold market, in gold, we're looking at something like 15 to maybe 30 lots on the bid and offer. Obviously, that does take in from time to time. It does change with regards to how volatile it is and how it's moving. But we're specifically looking at this market in a very thin environment. We're going to take a look at when a large order comes onto the order book, how the market reacts to it, and potentially see how we could have traded this when it did occur. Okay, so just bear with me for 2 seconds while I load this up. It's going to be rather fast. The order flow is going to be very quick, very successive. So if you just try and keep up with what I'm trying to say, try and keep up with what I'm trying to look at in the market, it'll just all of a sudden get very quick and violent. So just bear with me when it does. I'll try and get through it as quickly as possible, but at the same time, do it in such a way so that we can understand what's going on. I might even pause it because we're using the replay software. I can actually pause it and then we can see what it looks like when it's actually quite volatile. So if we take a look at the gold futures, we're currently trading around the 1,178 level. It seems as if, we're moving closer and closer to the lows of the day. If I'm not mistaken, that is the low of the day. So it seems like here we go. The low of the day just updated now. So we're actually trading, this is the low of the day. We've just seen a massive blip in the market. Now we've seen a very big offer just come into the market. So I'm going to pause it there. So someone has just come into the market, just so we get this straight. This is going to happen very, very quickly. In this particular setup, someone sold a load of gold futures at market, pretty much because we saw a massive blip. That's basically indication that someone just sold that market, and he's been left, as you can see here, he's been left actually with some of his order left on the offer. So he's actually sitting on the offer now after he's just taken out. If we just scroll this here, you could take a look. The lows were somewhere around here. And you can see the move from his selling is taking us all the way down to this area. Now he's sitting on the offer with 1,700 lot. Now, comparatively, with respect to all of the other bids and offers in the market, he is massive. So he's a very, very big offer. But you have to understand what the market has just done. To put it into context, after that guy has just sold that many contracts, we saw a big blip in the market. So now we know that the market is somewhat undervalued. Because what happens when you get a massive blip in the market. The market's now trading. It hasn't had time to auction. It's just blipped. It's come completely out of value. It hasn't auctioned any of the prices above. So we have to keep in mind that to the upside, there's probably some levels that the market still wants to auction off, unless he has a lot more size to do. So we'll just play it off from here. The strategy on this is obviously the same as every other one. We're front running him right in front. We're just trading 117.50 here. So we're looking to potentially get an offer here and take it for a few ticks. So let's just resume this video and bear with me just to kind of understand what I'm trying to do here on the order book. So we're offering some contracts here. I won at 1,175. We're hoping to get a fill here, just in front of this, this offer here. We're not trying to do too much size because we know there's a lot of it to trade above. But at the same time, so now we've just been filled. We're going to try and get some of these bids out. We'll take 20 off of the 25 and we'll leave the other 5 on just to, for argument's sake, to see if we can get a little bit more out of it. So we've taken that out now. We've taken 15 off. We've just got a few more. And if that wiggles down, we're going to have to try and get out here because it's just come out and we've got to try and get out of this, the rest of our position. We've got 2 lot on. We can just hit that at market because we don't want that anymore. But effectively, on the majority of our position, from the area where we actually got filled, we managed to take a decent scalp. And remember, just like we mentioned in the previous video about the Euro stocks, from a strategy perspective, again, we're seeing a very similar theme play through from a strat perspective. So we sold 1 tick in front of large offer. Just a second here. We'll just take this out. Just bear with me. I'm just having a bit of... There we go. Sorry about that. Just erase that. Give myself a little bit more room to write here. Here we go. So we sold 1 tick in front of the large offer, which was the first part of the trade. And the offer, when we say large offer, was 1.7K lots in a market that's very, very thin. So we have a bit of confidence that when we get there, there's other traders who are going to be trading off of that big offer as well. And we took between 3 and 5 ticks. Now, we could have been looking for more, but like we said, you know, if that had shown up in a range-bound market or a market that's about to break out, it hasn't broken out yet, I would have been looking for more. But 3 to 5 ticks because, like we said before, the market was somewhat undervalued after we saw the big blip. So 3 to 5 tick target. We left a little bit on to see if we see a little bit more continuation. Obviously, we're willing to take that bet, and then we're out. Our risk is no more than 1 tick, basically above the offer. Now, like we saw in the last one, as soon as we saw a lot of the size trade through that offer, so now we've just seen we've traded all the way back up to that area, the scene of the crime. It's a different trade setup, but as soon as we saw, back to what I was saying before, as soon as we saw the offer here, and we're sitting here at this price, is 1.7K lots. As soon as we saw this guy wither down to about 700 to 800 lots, that's where anyone that was short in front, including myself, is going to start hitting into these guys. So if anyone's gotten short in front with a 20 lot, if there's, let's say, 10 people short with a 20 lot, just like me, you know, they'll start covering, and at the same time, you'll see 200 lot trade into that, you know, 200 lot that'll go wither down to a 500, and then anyone that's really seeking any liquidity at all, they could just start lifting that quite easily, and that's also a trade setup in itself. I mean, if we were to replay this again and trade it from the other side, you could also see there's another setup in there. And actually, I'll just go through that with you guys right now. If you just bear with me for about 20 seconds, we'll try and load this up again and basically trade it from the other side. And we'll see if there's also a trade set up in that. And we know once that goes through, once it actually trades through that price, there's people caught. So there is also a trade set up on the side. So don't get me wrong. There's not front running side doesn't necessarily mean it's the only trade you trade around the order book. You could also trade against it. And actually in this case scenario, it actually would make sense to trade against it. And I didn't show you guys, but it naturally, if I was trading this purely on a price ladder in front of my screens, I probably would have cut and reverse there. And when I say cut and reverse, I mean, I would have been short. And as soon as I took that out, I would have been hitting long at this price here, just above it. Just with everyone else trying to get out of their shorts, would have been anticipating that and hopefully looking for a move back up. So let's just see how we would have traded that in the other direction, for example. So this is just before the blip. Heading down to the lows. Remember around this area, the 74 mark, that's where we saw the blip. We'll just get our ladder ready. So we just saw the blip. Let's just trade that with a 5 lot. I'll take quick amount out. Trade another 5 lot. Now we're ready. Once that gets down to a decent amount, we think that the market could clip through it. We're going to start getting aggressively long above market here. We've just been filled on that. We'll take a quick 2 ticks for that. We've just taken those 2 ticks. That's withered down to about 1,300 lots. If we can get through that now, potentially look to play through it. So that's withered down to about 800 lots. Bang. There's nothing there left. We're lifting the prices above. We're looking for a quick, swift move to the upside. Anyone that's gotten short in there needs to now cover. We'll take out 1 lot at a time as the market now needs to get back to the area in which it broke out from. And that's usually what you get in some of these setups. When the market blips from an area, let's say we knew it blipped from around these 74 mark, that's usually the area where the market likes to go retest, because if the market's truly bearish, it should hold an offer around this area. So if I offered around here, I could possibly get a good few ticks, but I'm just going to look to get out at that price because we saw the blip. We're looking potentially for the market to trade up to that price. But from a trade perspective, from a very quick front-running trade perspective, you could see again, once that offer got taken out, as soon as it got withered down to a reasonable size on the order book where a lot of market participants said, we can take this out now, that's where he gets clipped. It goes down to basically nothing, and then the market rallies because anyone that's sold in front of him now has to pay up. And there's our final fill. There's basically the practical example that I wanted to show you guys. Hopefully you guys, you learned a lot from it. And we'll do a couple of more examples in the videos ahead. Thank you. Bye-bye.